Buffett Partnership Limited, 810 Kiewit Plaza, Omaha, 31, Nebraska. November 1, 1965. To my partners for 1966. Enclosed are 1. 2 copies for the commitment letter for 1966, 1 to be kept by you and 1 returned to us. You may amend the commitment letter right up to midnight December 31st. So get it back to us early, and if it needs to be changed, let us know by letter or phone. Commitment letters become final on December 31st. Every year I get a number of calls in the first week of January expressing a desire to add to the January 1st capital. This can't be done. 2. A copy of our ever-popular The Ground Rules. It is essential that we see eye to eye on the matters covered therein. If you have different views, fine, yours may be better, but you shouldn't be in the partnership. Please particularly note Ground Rule 7. This has been added this year reflecting a moderate shift in my attitude over a period of time. It represents a decidedly unconventional but logical, in my opinion, when applied to our operation, approach and is therefore specifically called to your attention. Any withdrawals will be paid January 5th. You may withdraw any amount you desire from $100 up to your entire equity. Similarly, additions can be for any amount and should reach us by January 10th. In the event you are disposing of anything, this will give you a chance to have the transaction in 1966 if that appears to be advantageous for tax reasons. If additions reach us in November, they take on the status of advance payments and draw 6% interest until year end. This is not true of additions reaching us in December. The partnership owns a controlling interest in Berkshire Hathaway Incorporated, a publicly traded security. As mentioned in my mid-year letter, asset values and earning power are the dominant factors affecting the valuation of a controlling interest in a business. Market price, which governs valuation of minority interest positions, is of little or no importance in valuing a controlling interest. We will value our position in Berkshire Hathaway at year-end at a price halfway between net current asset value and book value. Because of the nature of our receivables and inventory, this, in effect, amounts to valuation of our current assets at 100 cents on the dollar and our fixed assets at 50 cents on the dollar. Such a value, in my opinion, is fair to both adding and withdrawing partners. It may be either of lower than market value at the time. As I write this, we are orbiting in quite satisfactory fashion. Our margin over the Dow is well above average, and even those Neanderthal partners who utilize such crude yardsticks as net profit would find performance satisfactory. This is all, of course, subject to substantial change by year-end. If anything needs clarification, call or write John Harding, who is in charge of deconfusing partners. The tax situation is about as reported in the August letter, but if you would like John to make the calculation for you, you'll be glad to do it. Cordially, Warren E. Buffett. P.S. We are continuing our no-price policy for the last ones to get their commitment letters back to us. It will make things easier for us if you get it back pronto. If you want to make changes later before January 1st, just give us a call and we'll amend it for you.